Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Coming to stock market yesterday, what a day it was. Oh my God! Of course, I don't remember. I think when was the last time we had such a fall? I think sometime in October last year. Yes, so we had the biggest fall of this year yesterday, and the market, in fact, was going crazy. What craziness I would say. First of all, the market opened with the gap down, and there was no recovery from the gap down. And the first thing we could see was the selling continuing throughout the day. And till the end of the day, there was not even a bounce back. At the end of the day, there was a small bounce back, but that also could not be sustained. And the major support of 17,700 was broken yesterday. So, things of course looked really bad yesterday. Of course, we'll discuss what happened, why all that little later. But before that, let us look at what was cooking in the market this morning. So, if you look at this morning, the SGX Nifty is already indicating almost 50 to 60 point gap up opening. So, it would be, of course, a good feeling to all those people who have sold a lot of puts yesterday. And apart from that, if you look at what happened in the major news that we were waiting for yesterday was, of course, two things. One was the monetary policy detail which was coming out from RBI for India, and second one was the minutes of the meetings from the Federal Reserve monetary policy meeting held last month in the US. So first, let me talk about India. So if you look at India, the first thing that came out was the monetary policy as expected. It was a consideration to probably go with the 25 basis point hike in the upcoming monetary policy meetings. And not only that, something positive that came out was few people have actually voted against further rate hikes in India. So that's a good sign. But of course, the RBI governor has of course decided not to, stop. But in fact, they would continue to rise. But of course, there are few members in the committee who are feeling that in India the rate hikes is not required. So that itself is a positive news, I would say. Now let us keep that aside. Let's look at what happened in the US. So I'm sure all of you are waiting for what the news about the crash yesterday. But wait, we need to understand a lot of things before that. So now, if you look at the US market, of course, had fallen big day for yesterday, and the expectation was to wait and see what's happening in the Fed meeting minutes released. So in the yesterday's minutes that was released, so please remember this was minutes of meeting held last month, not Feb, right? It happened in January, and that minutes have come out now. In fact, those times the market situation in US was better because the economy was feeling dangerous because layoffs and all kinds of negativity with the market data also coming bad. So all those things which was kind of favoring a lower rate hike. So this minutes is from that day, not from today. So today the situation is totally different in US. In fact, the data, the economic data actually states that the economy is getting stronger. And this actually is getting some more fear into the market. But this minutes is actually about what happened last month. So in that also what they're talking is that Federal Reserve members have clearly told that the Federal Reserve is deciding to continue to monitor the economic data, and the rate hikes will continue to happen. And in fact, there were also suggestions for the rate hike to continue at a pace of 0.5%. So 0.5%, already US has had big 0.75% hikes earlier, and after that it was reduced to 0.25% after the economic data came favorable, and now the suggestion to even go up to 0.5 basis point, yes, it could be a little jittery. But then if you remember last week, I think we had spoken in one of the podcasts, I had told you that one of the Reserve Monetary Policy Committee member actually came out and told that he wants a 0.5% basis point, 0.5% hike in the interest rate. So this was kind of taken, with a pinch of salt, and we could see the market actually kind of discounting. Like we always say, the market always discounts in advance. So whatever this 0.5% discussion was coming out yesterday, market had already discounted the rate for yesterday. So that is what is cooking in the US market. Now with all this, if you see what happened in the US market opened flat. From there, it was rising up. Nasdaq at one point was above 0.5%. But after this news of the federal minutes came, what happened was the market actually fell. But then The good thing is before the market closed, it recovered, and not only recovered, it came back to positive. So Nasdaq has closed in positive, but then Dow has closed like negative. But I would say it's a flat closing, not a big difference. Now, after the US markets closed, the Nvidia results were coming out. So analysts' expectation is that the results are better than expected. So naturally, Nvidia stocks have gone up, and slowly the futures also have gone up. So the futures are kind of pointing positive in the US again. Now let me come to Indian market. So what happened in Indian market yesterday? We could see. I'm sure most of you would have read the media. A lot of people say it is the Adani fall continues and all those things. Yes, Adani stocks did fall, but how many of you noticed this? That it was not just Adani. More than 200 stocks yesterday have hit the lower circuit, and every sector in India has fallen yesterday. The major fall contribution, came in from where? From Reliance, HDFC Twins. So these are three companies which actually led the drag in the market. Adani is just a small part of it. The weightage of Adani is much lesser. So it was the entire stock market which fell yesterday. So, and the interesting part is, like we have been seeing a common trend recently, yesterday also, the institutionals, so if you see FIAs, they have sold for just about 570 crores, and DIAs have bought for 270 crores. So the net selling was just about 250 crores. And for 250 crores, you don't have to see such a big fall. So basically, it looks like the retailers are getting stronger, and it was a major panic in the retail sector. And one important thing is, of course, it could be also the volatility led by the month-end expiry. Yes, today is the expiry. So with the month-end expiry, things are subject to be volatile, and that's exactly what happened yesterday. So the volatility is expected to continue, of course, and today is going to be even volatile. But then one important thing that we can analyze, I can share from my experiences, whenever market has had such a big fall, there have been many instances where the market has opened with the gap up, but initially the gap up doesn't sustain, it falls. And if it is able to take a support at the same level where it had taken a low yesterday, then there are chances the market can see some basic recovery. So that is something to be watched. So if yesterday's low is broken, that is if the market goes less than I would say yesterday's low was around 17,530 or 40-ish. So if that is broken, then market, there are chances the market can actually fall further. But however, 17,500 is an important support. So unless 17,500 is broken, I would say a market would kind of expect to close between 17,500 and 17,700. So I'm expecting the expiry to happen between 17,500 to 17,700, but then intraday volatility can be really huge thanks to the monthly expiry, and there are chances the market can go up or down, but then finally it may settle around this range is what I feel. So the markets are going to be volatile, and one important thing that you need to look at is if you look at Reliance has been in a consolidation mode for a really long time. And after such a fall in Reliance, in fact, yesterday Reliance was down by almost 2%. HDFC also is looking good actually. So HDFC Bank is close to its 52-week high. So with all this major falls, if at all people think of adding all these to a kitty at this point of time, there are chances of a small recovery also. But does that mean there is no more fall ahead? So definitely that cannot be commented. Like I've been always telling, nobody can ever predict the market, but we can only anticipate the market, and we just go with the flow. So if I look at my view of market right now, I would say the most important level to be watched right now is 17,500 and 17,400. If that is broken, if 17,400 is broken, then I would say the next important level will be 17,000 only. So I'm not expecting market to kind of break 17,400. I'm not talking about today. Today 17,500 is important, but I'm talking about the next 1 week. So the next 1 week view, I'm looking at market not breaking 17,400, but if that is broken, then 17,000 would be the level I watch for the lower side. Now on the higher side, now of course 18,000 is out of question. So 17,800 is a major resistance to you look at. So will 17,800 be broken? Of course, that looks tough now. So things are getting jittery majorly because now again, the economic data across the US has again started coming positive, which is not good for the economy because the inflation fears again rises. So until that elephant is addressed, markets are going to be like this. So we are right now going through both internal and external factors that's affecting the market. Internal is of course Adani Group. So Adani Group has to settle somewhere. Adani Group has been very volatile. And because of Adani Group, all the PSU banks, recently you must have heard Bank of Baroda CEO coming out and telling they're ready to lend money to Adani Group. Immediately we could see all the PSU banks kind of falling down. So PSU banks also have to take some stability once Adani saga is clear. But apart from that, the global market also needs to be watched because the US inflation jitters are going to make life hell for everyone. Along with that, the latest problem is the spat between US and Russia. That is the Biden and Putin. So you must have heard how Putin has kind of decided to get out of the nuclear weapon treaty. So that is something which is not looking good. So of course, the market itself, goes on into such situations at times. It is only the strong who can actually sail through this. In fact, I've been always telling you, why it's important to do investing than trading. Trading is something like, a business, a regular profession, and it needs your time, dedication, passion. If you love it, you do it. But then investing is something that everyone should do, and investing is easier. All you need to do is make some money and keep investing small portions into equities, and that could be via mutual fund, via direct stock. But do it. Doing that makes the difference, right? So these are things which are very important, I would say. As of now, the markets are looking jittery, but then I would say when market has fear is when we should start investing. So that's exactly what I'll be doing, what I am doing, and looking forward to have a great investment in place by the time the market starts recovering. So this is the time to again reiterate SIP mode of investment. Invest into a mutual fund right now. And if you need support, we are here to help you free of cost. All you need to do is be a part of our community, join free by going to the link mentioned in the description or send a WhatsApp message on the number given here. And our team will help you do that. So with that, this is Shrikant Rajan signing off, wishing you a great expiry. Looking forward to a day closing well. Goodbye, have a great day. But before we leave, do remember to press the like button if you love the content that we share, and do consider subscribing the channel so that you can get the latest notification whenever we post the new update. Goodbye.